Okay, well, a very, very good morning to you all. Thank you so much for joining us bright and early. I hope we're going to have a very lively conversation this morning. I am joined by an extraordinary group of panelists. My name is Catherine Garrett-Cox. I'm Chief Executive of Gulf International Bank in the UK. And in terms of our panelists today, to my right, I have Mario Greco, the CEO of Zurich Insurance. And then we have Kei-Yu Jin, who is a professor of economics from LSE. On my left, I have Jeremy Allaire, the founder and CEO of Circle in the US, and Mike Corbett, CEO of Citi. So in terms of our mission today, we basically want to talk about two major topics. The session structure is the future of the financial and monetary systems. And the idea today is that what we really want to do is to explore the outlook for the financial services and insurance sector, mainly focusing on two disruptive forces. The first topic that we want to talk about is digital disruption, and the second topic we're going to talk about is going to be climate change and sustainability. But what I really would like to do is to be able to get straight into Q&A here. And so with that regard, Mario, perhaps I could turn to you and talk about what are the shifts that we're seeing in response to digital disruption within businesses and within the system as a whole?
Digital disruption is changing completely the industry I live in, which is insurance. It's driven by customers using technology and adapting their needs and their will. And that is calling for the industry to provide a completely different service level. The amount of transformation in retail is so massive that I think we can imagine that in a few years' time, the retail industry of insurance will be dominated by different players or by the same brands transform themselves or morphing themselves into different companies. Now, at the same time this is happening, there is also the transformation brought by sustainability and by the need to make the planet sustainable over time. They both call for huge investments and for transformation of the business model. And the matter of the story these days is that the financial markets are not supportive and not helping, mainly because what I see is a price distortion. So prices are not incentivizing the actors to behave and make the investments which will improve the speed of this transformation and make the solutions available quickly to all of us. There are estimates that in order to reach the Paris Agreement, Europe only should invest 180 billion in the next 10 years. And they're probably underestimated and not overestimating. Now, there is no way to find this 180 billion in what the European government, states, countries have available today. Financial markets should be supportive. Prices don't incentivize either private institutions, banks, insurance, or other companies to make these investments. And the digital transformation is exactly the same kind of issue. The revolution is coming, but prices are not yet forcing the actors to make the investments.
And within the insurance industry, what does the digital disruption side mean for the resilience of your industry at the same time?
Yeah. What digital is making possible is that customers finally see in insurance what are the alternatives, what are the opportunities, they compare, and they can make their choices freely. And moving out is now without any costs, while for centuries it was extremely expensive to move out of one insurance company into another because everything was controlled and managed. Which means that retention, stickiness, loyalty in our industry is falling down dramatically, and the cost of acquisition continues to grow, which is a massive threat to the sustainability of the classical way of doing business. And this requires a very different approach. Since years ago, we started investing in pure services, not insurance services, services, in order to create opportunities for the customers to appreciate the value that we bring to them and to, through that value, decide to stay with us.
Thank you so much. So it's really all about giving consumers better services, better access, better quality, and perhaps with you in mind, Jeremy, given what you're really working on in the whole circle side, the cryptocurrency side, is how do we make the financial and monetary system more inclusive for all? Can I maybe ask you to share your perspectives on this topic?
Sure. Thank you very much. I like to think about this sort of these digital disruptions on an arc, and kind of where are we on that arc? And it's very easy to look at digital disruption of, say, the media industry and kind of where we are on that arc, or the communications industry, or the retail industry, where fundamentally over a 20-year period, the leading companies are now completely different companies with customer bases in the billions. It's just a very, very different arena. In the financial services space and in the monetary system, I think we're earlier on that arc. And the metaphor I like to also use is we're kind of going from the periphery to the core. So digital disruption in the financial system today has really been at the periphery. It's been putting a new user interface on top of an existing system, basically, or lipstick on a pig, as I like to say. Moving down that arc, though, I think that we're now really at an inflection point. And that inflection point is where we're finally revisiting the very core of the financial system. We're looking at the very nature of money. We're looking at the very nature of how money is issued, how it's distributed, how it's utilized. And fundamentally, there are several things happening right now that are driving that. So organically, over the last 10 years since the financial crisis, we've seen this growth in an alternative architecture for how money can work through blockchains. Very recently, we've seen the growth in stable value cryptocurrencies or stable coins backed by central bank money, US dollar currencies and others. But really, critically, the inflection point is also driven by two major facts. The first is an alliance of some of the very largest technology companies in the world announcing a stablecoin project that will reach billions of people, and a currency and a digital currency model that will allow people everywhere to transact with each other, people and firms everywhere to transact with each other with the same ease that we communicate and share data. And that's very deep at the core of the financial system. And we're also seeing stable value digital currencies being launched this year by massive national sovereigns such as China, who's introducing a stable value cryptocurrency built on the Chinese yuan and the RMB. And ultimately, that has tremendous implications where these digital currencies will be able to be projected out to any internet-connected device in the world with the same ease that we can share any piece of content to any internet-connected device in the world. And so we're getting to the core. And I think that's real disruption as opposed to at the periphery, the kind of let's make these access a little better, make the retail experience a little bit better. And that's very, very exciting. And so that introduces a lot of very significant challenges. We're all aware of the policy challenges that exist around this. Central banks, national governments, national treasuries, tax collectors, lots of others who are challenged by this very, very fundamental shift. But it is accelerating at a tremendous pace.
But I was going to ask you, there must be an inherent conflict between this openness that you've been speaking about and the disruption that we're seeing, and this idea that you can connect via any internet-enabled device, and the ultimate structure of the financial and monetary system, which is one which is heavily regulated, heavily controlled, and very much so done on a national basis. So how do we manage that conflict?
Yeah, I think this is something the whole world has to grapple with. I think none of us would like to go back in time to a world where we can't freely communicate with anyone on the planet without any intermediation, with some rare exceptions. We all accept as a society some trade-offs. We accept the fact that we have open communications, but we also accept the fact that terrorists can recruit people on YouTube. We're not saying shut down YouTube. So the financial system's a little bit different than communications, and there's sort of identity and risk issues that are real. But we have to solve those. We have to revisit the way those issues are solved. Right now, it's sort of a blunt force mechanism for enforcement, which very much ends up tying to national sovereigns and their kind of policing mechanisms. And I think we have to look beyond that. We have to look to kind of global schemes and technology-driven approaches for identity and risk that run alongside of these blockchains and digital currencies.
So Mike, perhaps I can turn to you. I was reading up for this panel, and I read that you were talking about how the financial services industry is in the middle of a transformation, and it's an exciting time to be in banking. I would agree with you. Not everyone thinks that bankers are exciting, but
it's all relative.
It's all relative. But how would you bring your perspective to this conversation that we're having, and what is the role that Citi can play?
Well, I would, Jeremy uses his metaphor of an arc, and I would agree. I think the way we speak to things is that we're in the very early stages of writing the next chapter of banking, and that chapter's entitled digital. And I think part of, when we think about what's happening, we're changing the business model, we're changing the customer interface, we're changing the cost to serve. And all of those are on the table. But I think in some cases, what some people miss in banking is this analog to digital transformation is not a standing start of a new industry. And oftentimes, the challenges that we have is we can only move as fast as our customers or clients are willing to move with us. And when you think of banking today, age differentials completely change the way that we interact, right? I often talk about my family, my 94-year-old father who forgets his PIN by lunch every day, doesn't have much interest in digital, and my children who never go to a branch, and my wife and I in between. And we can't get too far ahead of any of those that are out there. I think the second piece is, as we think about it, is it's not just about banking. The challenge that we give ourselves every day is to be out there, and on the surface this will sound uninspirational, but when you process it and think about it, I think it's quite powerful, and that is matching best in life experiences. Right? It's not about being the best bank, but it's around the expectation that we will deliver and match the best ride hailing, the best retail interface, whatever those are that out there, that financial services can match those. And so I think we're on this journey. Hopefully, as Jeremy speaks to, this does accelerate. We think it will, but we can't get so far ahead that we leave our customer and clients behind us.
And I mean, to that extent, as you said, because the millennial generation wants very different things to our 94-year-old grandparents. Mm-hmm. But at the same time, I mean, how do you at Citi think about the idea of partnering? I mean, I think one of the common themes that is always characterized at these meetings is the power of collaboration, the multi-stakeholder dialogue. So what does that mean to you? How do you bring fintechs to your organization, and how do you do what you do best and at the same time capture what they can bring to the party?
Yeah, I think financial services, when you go back in history, probably has this reputation of kind of being very inwardly looking, and around technology platforms, we were probably doing most of those things ourselves. Today, when I look at our model, really three-pronged, we continue to do some of that, but we actually go out and partner, and where, in our case, we've got disruptors or we've got inventors out there, we can give them the access to scale, we can give them access to 150 million clients in 100 jurisdictions around the world. Not many companies can do that, and they can give us access to their technology. And then the other piece is that's probably newer to us even than that is that we're buying, right? We're out buying. So a good example of that would be in cyber, where we're not inventing our own. We're out buying. In other cases, we're collaborating around offering strengths, and we think that three-pronged approach is probably the most powerful.
Thank you. Kay, perhaps I can turn to you now. We've obviously heard some industry specifics, we've heard some company specifics, but perhaps sort of stepping right back up in terms of what this really means for the future of the system. Perhaps you could share some of your overarching themes and trends that will drive us.
Sure. It's interesting that we talked about financial disruption. That's an advanced economy view. And an emerging markets view is not about disruption because we don't have such a mature financial system to disrupt. In fact, digital services have actually filled in rather than disrupted. And China is one of the very leading examples where a developing country has some of the leading technologies in fintech. And it is very clear that this very integrated system has helped reach rural areas, helped with small business owners. There have been many, many studies that have shown that it is more likely if you are on the Ant Financial platform, part of Alibaba, that you're 40% likely to become an entrepreneur the further you are away in rural areas. So I think these are real things, and I think we're going to touch upon this in the next topic, but having that digital connection has actually brought about social changes as well in climate change related and sustainable related areas where people are on this platform and they're incentivized to collect carbon footprints, etc. But this is part of the digital connectivity that has helped China include everybody. So it's financial inclusion as well. But that is just about financial inclusion. That's coming from an individual perspective. We need to think about financial stability, which is the overarching macro theme. Will digital connectivity help with financial stability? It's been 10 years since the financial crisis. We're going to have another one. The problem with the last and the problem with the current macro environment is a lack of country coordination. How are we going to be able to do that in this financially digital connected world? There are three problems. One is we have the zero interest rate phenomenon in advanced economies. That's fueling financial instability, and that's going to stick around for a very long time. That is my view. A lack of chronic aggregate demand. Then you have the emerging market side, which are not included in the international monetary system. As part of an example, in the last financial crisis, you have the US Fed having central swap lines with 6 advanced economies, but where are the emerging markets? They are a big gap to fill, but countries like China, India, Brazil, they're big. They're more than 50% of GDP, but they're not included in the international financial system. So when we talk about digital services and digital disruption, we need to think about financial stability, exchange rate stability, and coordination. And in the current environment, that's not really looking very good.
Well, thank you very much for your comments. And you touched on climate change and sustainability, and really that's where I'd like to turn now. It is an extraordinary phenomenon to me to see that finally this topic is getting top billing at the forum. I think this is my 13th year, and I'm absolutely delighted to see finally people have woken up to the risk that climate change poses to financial markets, but also the opportunity. And I think with that, Mike, I'd like to turn to you for first comments in terms of, how do corporates tackle the challenge and the opportunity? I mean, you have been deemed to be a huge leader in this space in the US. You were one of the first, I think, the first US bank to sign the Principles for Responsible Banking. Thank you for your leadership. Keep it up. What more should we be doing? Have we got it about right? And what is the city pledge to tackling this global climate crisis?
Well, I think very importantly, our pledge is to all of our companies and our clients that you should come up with your strategy, your approach to climate, get stakeholder buy-in in the round, and we will support you. Because almost every company, government is on a journey right now. They're not where they want to be, they're not where they need to be, and we need to be smart about how we help facilitate that. So set your standards, get buy-in, and we as a bank, we as a banking system will support you. I think the second thing, and Mario touched on it in his opening remarks, and that is we've got to get the incentives right. It's what we call the carrot and the stick, right? And when we look at carbon pricing, I think many would argue that it doesn't create the proper incentives today because it's mispriced, i.e. underpriced, and we're not creating the right outcomes-based results, meaning that I can go in today and I can do a green bond, and that's terrific, but it really doesn't measure what I've done. I've made a pledge to try and create some outcomes, but we've actually been introducing outcome-based financing where the actual cost of your financing will be based on what your actual carbon emissions is at a certain point in time. So getting the stick right in terms of the right benchmark pricing and then creating the right outcomes. And certainly as a financial institution, what I say to our clients is I don't want to be the sharp end of the spear, meaning I don't want to have to be the ones telling you or enforcing standards in your industry or in your business. You should set those, you get proper buy-in, and we'll be here to support you.
And to that end, picking up Mike's point, Mario, what is the degree to which, we can facilitate this within the system? And, from a Zurich perspective, I mean, how do you think about this? I mean, I know it's sort of overarching so much of what you do, but are we doing enough, and is it happening fast enough?
Definitely not. Definitely not. And the real question is, what can we do individually or collectively to make it much faster? So far, the world has moved, driven by price messages, and price has been a vector of information, and the companies have been reacting to price informations. As Mike was saying, price has not been helpful so far, mainly because I think we have been moving the old system toward very short-term reactions. What the central banks have been doing over the last 10 years has been short-term fixing of financial issues, and they've been quite successful in avoiding further troubles of the financial markets. However, that distortion of this short-term intervention has changed completely the nature of prices, and what we need now is some investments for the mid-long term, and prices do not reflect that. And so what we have to do as insurance company now is that we have to underwrite or decide not to underwrite some investments taken by companies where we have to take decisions that the prices are not showing, are not manifesting. And we're doing that. And we're doing that based on ethical standards. We're doing that based on compliance with the Paris agreements. But it's not fast enough. And it's a tough job because, again, as Mike said, I mean, we don't know exactly how else should that industry restructure itself. And we're not supposed to do that. So the only thing that we can do is stop funding. But stop funding is a brutal reaction to a market displacement. Now, in theory, we should now call for a global agreement. There should be a price for carbon. There should be a price for the disruption brought by these investments in the world. I don't think we're going to have anything like that. A global agreement on anything these days is almost unthinkable. It would be sufficient to have a collection of local decisions, but yet that is not there, and we're waiting to see countries' governments developing in that direction.
And thank you, Mario. And I suppose perhaps turning to you, KU, I mean, Mario's just said a global agreement on anything, even something as important as this, is unthinkable. From a sort of macro perspective, would you share that view too?
Yes, absolutely. Climate change is one of the things, like international monetary systems, that need a lot of international coordination and collaboration. The reigning problem still, and I'm going to speak another from the perspective of emerging markets again, developing countries in general, is this perennial tension between development, which they are entitled to, and the cost of development. It's always that tension, and I think countries like China, India have demonstrated that at some point they're ready to commit to having a more balanced position. But there's a lot about investing, right? Long-term investment, because we know that when you have long-term investment, it reduces the cost of green technology. And that's the core, that's the key. You have to have more adopters, you have to have more firms willing to take and make these long-term decisions to reduce the cost of technology that would be adopted by everybody. And so we need that long-term view, and we need political leadership, which is lacking in much of the Western world. It's interesting, this tension, I come from China, and the complaint is always you have such a strong state. But it is because of the strong state and because of their decade of commitment to sustainability and green technology that they have really taken large strides, massive strides as a developing country. There is the state level, how much we need to have the state political leadership and long-term vision involved. And then there's also the individual level. How do you bring about social change? Again, China has this interesting mix between a very strong state, but also a very powerful private sector, where the example I gave was really this Ant Financial, which has hundreds of millions of people on its platform. It is giving incentives for individuals to act sustainably, to be aware of climate change, and it has been very effective in bringing about social change. So it has to be an integration between a strong state, or let's say a politically visionary state, and the private sector, and work together, as well as the international cooperation.
Thank you. And I am just going to open up for questions in a couple of minutes. But just before I do that, just picking up on the themes that we've already heard, Jeremy, this idea of a collective solution, we need to invest for the long term, but also picking up on what Kei was just saying about this idea that particularly around the topic of climate change and sustainability, it's the focus on the individual. And a lot of what you're working on is exactly the same. So how would you wrap your perspectives around this topic?
Yeah, there are a couple of, I think, key things. One of the things in the blockchain space is people are starting to rethink what corporate forms actually are. So are there new types of corporate forms that we can create that align incentives in different ways, allow stakeholders to participate in different ways? A lot of these tokenization projects are attempting to do that. But what that actually gets to, in my view, is there's a fundamental, very deeply fundamental mismatch between the joint stock corporation and its mandate. So as a director of a corporation, you have a legal obligation to maximize earnings, maximize earnings per share. And you have to do that and from a capital markets perspective, we talked about the financial system, the capital markets are built to incentivize short-term profit seeking by definition. So we are bound legally as directors to do that. Like, we can get sued if we don't do that. So there's a fundamental mismatch between shareholder capitalism and the climate crisis that we have. And it's not actually, I think, coincidental that the joint stock corporation grew into maturity in the late stages of the Industrial Revolution. We are now suffering the consequences of the Industrial Revolution on a massive scale. And the dominant form of economic organization today is shareholder capitalism. And so the change actually has to be in the nature of the corporate form. We actually have to have corporate forms that have a mandate to the directors that includes more than earnings, that it has to include a long-term component to it, which has to do with sustainability. And unless you change that incentive structure, the capital markets are going to go where the capital markets are instructed to go. And I think there are ways to kind of address that with existing kind of shareholder capitalism, as it were. But fundamentally, this is like I think a deeper structural issue with corporate forms themselves. And so I think what would be interesting is to see companies that are rebuilding their governance schemes beyond just earnings per share. And they reorganize their corporate constitutions to include climate change. And investors can then assess that and assess how well the directors of those companies are meeting those objectives. And hopefully capital markets will price that appropriately over time.
But I mean, it's not only, I would agree with everything that you said, it's not only about the corporate form and the benefit to shareholders, there's also a massive benefit to employees.
Absolutely.
I mean, one of the things that we've found even in the last couple of years since we've really been embedding sustainability and opportunities around climate change is it's much more engaging for our employee base, particularly the millennials.
Absolutely.
So I think, everybody benefits from this. So perhaps we have time to take a few questions if we have any from the audience. So what I was going to do is maybe take 2 or 3 and then we can turn to our panelists and see who wants to go for it. So there's one just here, please. Thank you. If you could just state your name and where you're from.
It's on? Yeah. I have a question for Mr. Greco. You said that in order to fight the climate crisis, you need international collaboration, but you're not very positive about that. Is there a level where you are positive about? For example, collaborations amongst the biggest companies or other? Is there a way to speed up the collaboration that we all need to fight the climate crisis?
Okay, thank you very much. So we're just going to take a couple of, so you have time to think about the answer. Okay, and here, yes? Banda, good morning.
Okay.
Sorry, but just get a microphone for you.
Thank you. I'm the president of Islamic Development Bank. And my question is, disruption is primarily driven by innovation. And innovation is the driving force for economic growth and job creation. But innovation, at the same time, is a high-risk transaction from the financial sector perspective. So saying we want to reduce the risk means we want to curb the growth. How to de-risk the innovation and how to align risk to growth in this area. And the second, the access to risk capital is available only to the hand-picked firms. And this risk capital is the fuel of innovation. So how to universalize access to risk capital, especially for developing countries? Thank you.
Thank you. Thank you very much indeed. And perhaps, is there one more question over there? Yes, if we can just get a microphone. Thank you.
Hi. Hello, this is Julia Horowitz with CNN. I have a question for Mr. Corbat. You mentioned that you would like your clients to set standards and then you, at that point, will support them. Does that mean you are in a different place than a company like BlackRock that said last week that they were going to put climate at the center of their business model, take away funding for coal-related projects and try to push the envelope forward on that front?
Okay. Thank you very much. So perhaps, Mario, if we can turn to you, the first question. I think we all violently agree that the speed is too slow. Where's the collaboration? What more can be done on that point?
I think the recent movements of Europe are promising. Europe is trying to develop a sustainability policy and putting together principles and actions. That is promising, but the question with Europe is always about what's the effectiveness of what Europe says and what the speed of acting. The rest of the world is not moving in any coordinated fashion or form. What we have to understand is that today's companies are global, and so they have choices, and so they go wherever there is the best financial opportunity short-term for them, they will follow again what the prices tell them to do. And so this is what makes me scared or pessimistic that we will achieve the right speed. Also, let me mention one thing that we don't enough remind to ourselves. This planet is in inertia. So even if tomorrow we go to zero carbon emissions, still we will see for a number of years, likely decades, rising temperatures. And we're at the point where this rise of temperatures is changing the way the countries are. I mean, Canada is going to become one of the best agricultural economies in the world, right? I mean, we never thought about that, right? But it's going to come, and it's going to come at this point inevitably. Right? Whatever we do in the next years, this is going to come. The question is about the next 30 years. Can we stop this movement for the next 30 years? That will require much more coordinated actions than these little very basic agreements that we've seen so far. And again, although Europe is promising, that's not enough yet. And governments have to do their part. I mean, I take a lot of blame as a private company, and I think it's all fair to blame private companies, but we can't solve these issues because it's not about a private company to be able to resolve these issues. We simply don't have the possibility to do that.
Thank you, Mario. And so turning to the second question that we had in terms of how you de-risk innovation, what about the access to risk capital? KU, Jeremy, do you want to have a crack at that one?
Sure, I'll take a crack. Yeah, I mean, I think they're both sort of two sides of the same coin. But on the de-risking of innovation, I mean, I think what we've seen in technology disruptions in the internet space has been a kind of, allow open innovation to flourish. And we've seen, huge platforms get built, broad social benefits that have come from those. But as they get scale, and most of those have happened without any regulation around them. They've sort of been unregulated at the start. And then as they get scale, we start to see serious, negative externalities, terrible things happening to people who get Uber rides, or elections getting rigged, or AI bots taking over the world. Some of these things that were unanticipated. And I think the natural response is regulators are now stepping in. And so I think with technical innovation, say in the financial system, I think there's this trade-off of how do we allow for the same kind of arc of innovation that took place in other internet industries, retail, transportation, media, communications. How do we allow for that same level of openness, knowing that there are going to be negative externalities? And do we attempt to overregulate early, or do we allow that to happen, see what the negative externalities are, and then address those later? That's a fundamental question, I think, in particular with the kinds of disruptions that are becoming possible today with the financial system. And I think it's key not to overregulate early. And then on the availability of risk capital, I think this is one of those things where digital assets as a model, where you can effectively price risk and allow a much longer tail of market participants, businesses that are forming capital, to efficiently form that capital in new types of global digital capital markets that haven't been possible before. That's becoming a new phenomenon. And I think one of the most exciting things about blockchains and decentralized markets and the things that they portend is that access to capital actually can get far, far more democratized and distributed.
And Kay, do you have a particular perspective on this question?
I think I'll just add that international technology also spills over. So we're seeing a lot of international technology firms competing with each other in different countries. And so how do you think about the regulatory framework that not just covers domestic, but also international issues? One thing that we haven't mentioned, and I completely agree, that in countries such as China that very much embraces technology, there's a lack of regulatory framework. But also one key problem is competition versus monopoly. And these big technology companies are getting bigger and bigger because of network effects, but also because data does have network effects. So it's important to keep them as sizable in scale, but then competition is a major issue.
Thank you. And so just wrapping up the question, sure. Mike?
Yeah. Well, first, thank you for the question. I would say that the environment's very much at the center of everything that we do. If you go back and look at our history, and we've spoken to a little bit, really dating back to 2003 when we were one of the early adopters of the Equator Principles, all the way through this year to being a primary signature in the Poseidon Principles around overseas shipping. It's central to how we think about things. And specifically at Larry's letter, I think we're very much aligned when we talk about making sure that you've got your stakeholders behind you. Certainly your shareholders are one of those stakeholders, but we've mentioned employees, we've mentioned customers, we've mentioned regulators. So getting your stakeholders behind you, and if you can lay out a credible path in that transformation and have that stakeholder buy-in, we're happy to support you. Again, where we don't want to find ourselves is being the person, as Mario said, that starts to dictate winners and losers, right? A bank's job is to support the communities in which it operates. It's not to dictate outcomes. And if the communities broadly defined are supportive of those enterprises, we need to be there to make sure that they're given every opportunity to try and execute against the things that they've laid out. And that's what I view our mission as at Citi.
Thank you. So perhaps to pull this session to conclusion, I know we're nearly out of time, and I'm going to hand over to Matthew Blake to close in the next few minutes. When we step right back, our mission today was to talk about the future of the monetary and financial system, but specifically with two key disruptive forces, both digital and climate change. So perhaps I can ask each of you, what is the one change that you would like to see on either topic within the next 12 months? And what's your personal commitment or pledge that you're willing to make in line with this? So, Jeremy,
sure.
We're going to go first.
Well, I'll stick with the climate emergency theme. I think what I'd like to see in the next 12 months is that a significant majority of listed public companies would, during their quarterly earnings call, announce their progress against climate emissions targets. and that become a part of their quarterly statements to the public, and that they undertake that. I didn't do a little research beforehand to figure out how many actually do. So maybe we're already there. I doubt it. But I would very much like to see that and kind of weaving that in. And then the second is just for my own company. We're not a listed public company right now. We're still a closely held private company, but we will make a commitment to measure and publish our own climate emissions and targets, and we'll publish that on a public blockchain, so it's a permanent record, and we encourage other people to make that a permanent record as well for their own progress.
Forever.
Forever.
Good job. Mike.
I think going back to one of the things that Mario mentioned is, again, I'm not looking for utopia, but more government harmonization in this area. That I doubt we'll ever get full alignment, but I think it's very difficult for companies that operate in multiple jurisdictions to be operating to multiple schemes. And so as much harmonization as we can get there. And I think from an individual perspective, again, to make sure that I'm leading our company in a way that's supportive of those that are working hard to do the right things.
Thank you. And KU, what do you want to see?
I'd say from the country level, talk less to themselves, but talk more to each other. And start firing up fiscal policy given the low interest rate environment to make long-term investment around the world.
And your personal commitment?
To talk more.
To teach the next generation and educate them. Fantastic. So I think the closing word with you, Mario. We started, we finish.
I like to see tax changes that will make carbon effectively priced across the world in the business decisions made. And for our company, I commit over the next year to quickly and fast develop the innovative, disruptive changes to retail, especially introducing new services for millennials and for well care, which is an area which is becoming more and more important for every citizen of this world.
Well said, and thank you very much. And just before we close, I'd now like to invite Matthew Blake to have the final say.
Thank you. I just want to say that this has been a fantastic panel. For many of us, it's our first opportunity to engage in our 50th annual meeting here in Davos. I run the financial services team here. I will make a commitment too, which is to position our work in a way where we contribute to better understanding the digital disruption that is ongoing in a more nuanced manner, and also to work with our significant partnership base in financial services and across other industries to help catalyze change for climate. And I think these are, if there's one word that summarizes the discussion here, it is we are living in a complex period of time, and we need people to come together during times like that across public and private sectors. And the forum is uniquely positioned to do that in a very valuable way. So I just thank you to everyone again for their very strong contributions, and I look forward to a terrific week together with all of you.
Thank you very much indeed. Thank you. I hope you have a great week.